Let's bring in Macquarie Group Global Head of Economics. Richard Gibbs joins us from Sydney this morning. Good Monday to you, Richard. Busy week ahead. We got non-farm payrolls, the MPC, CPP, CC, and then we got M&A activity already just in the first hour here. So what are you closely watching out for?
Well, this week we've got a mix really of the hard data, as you say, but also the geopolitics. And we've just seen from the report coming in relation to Iran and the rise again of the Conservatives there. And that's ratcheting up the tensions, of course, and President Obama's warnings. So that's coming through. Obviously in China we have some policy making at paramount level coming through as well. But we also have some hard data as well. In China, of course, fixed capital investment is something we'll be closely watching, because that's going to give us an idea of how well the composition of growth is travelling in China, of course. We have a situation at the moment where the construction sector is weakening dramatically in China, but the rest of the economy appears to be holding up. So we're going to need to be having a look at that and the lead into that data. As you say, in the US non-farm payrolls, an expectation that we'll see a 200,000 plus increase that will keep the unemployment rate firm at around 8.3%. Of course, in Australia, we've got a lot of growth data coming in, the GDP data for the December quarter, which looks like being on the softer side, suggesting that economy is really tracking below its potential. So, as I say, a combination of the hard data, and then we'll also be watching the with the softer side, the capital flows, particularly into emerging markets. We're seeing valuations in a number of emerging markets now starting to get stretched.
Lots to watch out for, Richard, as I mentioned. Before I talk about the RBA rate decision in Australia later on this week, let's talk about China first off, because one of the top stories this morning is the ICBC, the largest bank in the world in China, saying that the banks there, the big four lenders, have boosted their lending by $3 billion. Is this some relief maybe for the Chinese economy and to boost growth?
I think it is. I think it's designed to pump that liquidity in there. It's a question of what they can do in the construction sector, of course, because there are stories about over-construction in certain parts of China, of course. But clearly now the central bank wanting to be accommodative in terms of seeing the economy maintains a trajectory of around 8%, maybe a little under that. But certainly they don't want to see any dramatic dipping away. So this is really this whole issue about a soft landing versus a hard landing in China, and the banks now coming in to make sure it's a soft landing.
Yeah, Richard, speaking of that growth target, the expectations are the National People's Congress, which kicks off today. We're expecting Premier Wen to suggest that maybe, China's target from now on is 7.5% growth, which is backing away from the traditional 8% target that they've had for, almost close to a decade or so. Any concerns there that now China itself is giving itself more room, I guess, for slower growth in the future?
Well, this is an interesting one, because if you try and solve the old growth employment equation under the old system of growth or composition of growth in China, it doesn't mix, or it doesn't equate. So really what this is going to be dependent upon is them actually slowing down the rural-urban migratory shifts, so people not moving as rapidly into the urban areas, keeping people in the rural areas, getting their productivity growth up, which means if that can be done, you can actually grow the economy at a slower clip and not see a rise in mass unemployment.
Okay, well, let's turn our attention then, since we have the MPC, but let's turn our attention to what's taking place in Australia. RBA decision this week, what are you expecting? No move at all?
Suspect they're on hold this week. I think if any further move comes in this first half, it'll be probably before the federal budget at the beginning of May. So I suspect the Reserve Bank will continue to watch, wait and see. It hasn't become unnerved by announcements of job losses in parts of the economy, and so I suspect it's steady as she goes with the Reserve Bank.
Okay, Richard, one more question for you about non-farm payrolls on Friday. I guess we're expecting the unemployment rate to hold steady. Some are, again, predicting maybe 200,000 jobs being added to the economy. What would be a disappointing number to you, and considering that we had the best February since 1998? Will these numbers sustain the gains we've seen so far in U.S. markets?
Look, I think the market really is looking for QE3. I think if it wants to talk that, any number below a gain of 150,000, I think will be taken as very disappointing, and I think markets will again be positioning for quantitative easing Mark III in that environment.
Okay, Richard, good talking to you this morning. Thanks for your time. Richard Gibbs there, Macquarie Group's Global Head of Economics, joining us from Sydney this morning.